What's good, y'all? The biggest video I'll probably ever posted in terms of showing you exactly how I trade. My entry system. How the fuck do I enter trades? Why do I enter trades? What is the thought process behind me entering every single trade I take? So, with that being said, this is video 3, and I am simply just going to do the same kind of format as I've done. I'm going to show you guys an example on the charts, show you guys what it looks like, and then I'll backtest a few trades, showing entries I take and whatnot. So pretty much the main components behind my entry system is displacement, volume, and invalidation of the retrace sequence, right? I don't enter off IPG, CISD. I don't really trade ICT concepts. I think that shit's gay. I just trade purely discretion and a pretty non-mechanical system. I just enter off displacement, draw on liquidity, trending market, and like I said, once the retrace gets invalidated. So with that being said, let me get into and show you guys some examples. So, right, I'm on the hourly time frame here, but this is just a really good example. So you guys see this right here. It's on the hourly, but this is pretty much what an A plus setup looks like, whatnot. So boom, it looks like entering right here. Literally, this is what like your entry would look like, and let me get into why I would enter a trade like this, right? So what do you see here, right? So you see kind of putting together all the things I've said in previous videos. Boom, obviously trending in one direction. We have a draw on liquidity lower, and pretty much you got that retrace sequence, and you're just waiting for that retracement to get invalidated, right? Like I kid you not, I trade the most simple. Like it is the most simple system of all time. It's just the biggest thing is recognizing conditions, which will be next video, but like just going over kind of the main components behind it is genuinely so simple, right? Boom, you need to find your draw on liquidity. How do you find your draw on liquidity? You sit on your ass and wait until price trades to that draw and starts displacing to the draw on liquidity. Then, once we are trading to the draw on liquidity, what do? You wait for a proper retracement of price that rebalances the leg that we were displacing towards the draw on liquidity to. And then, boom, as long as it's not too shallow of a retrace where you're still in jeopardy to get retraced on and that trade gets stopped out and we still deliver to the draw on liquidity, or unless it's too aggressive of a retrace where it invalidates the idea of shorts, boom, then after that, all you have to wait for is displacement and volume and invalidation of the retrace sequence that we put into rebalance that leg, right? And that is exactly what it looks like here. So you guys see, right? Boom. We are obviously displacing towards the draw on liquidity. We retrace into this gap right here, and then pretty much all you're looking for is that gap to hold, and then you just need your confirmation that price is going to continue in the same direction towards your draw on liquidity, right? Like I said, if you genuinely can wait on your hands until you have a strong draw, you're probably gonna win majority of the trades, right? It is a very high win rate, and like it's a bit lower frequency, but it's a very high win rate system, right? So if you struggle with psychology, and if you really do not like kind of the style of constantly taking a trade every single day, having like to go through a multitude of losses, this is the way to trade. Simple continuation where you can literally just like have like, obviously I'm not guaranteeing you a high win rate, but it is a very high win rate system once you kind of get down on it and actually learn it at like a much more high level, right? So like really it is a simple system, and the entry system is displacement, right? So what do you see here, right? Boom, trending, retrace, balance, we rebalance price, and then you see instantly this candle, right? See, you see this candle here, right? So let's just do a quick kindergarten math, right? Let's count here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So it takes 15 candles. So, ready? It takes 15 candles for this, for price to rebalance into that gap, right? It took 15 candles to do that. And let's just count how many candles it took to flip out and continue flushing to the draw on liquidity. One. It took one. It took one candle. All right. So this is exactly what you look for, right? You like pretty much your main tells that the flip out of the retracement had kind of invalidated the entire retrace, and pretty much what gives you conviction to, again, like I said with stop loss placement, you're playing your stop loss where you have conviction that price is not going to go resweep that high, right? So what does that conviction come from? It comes from volume and displacement in the direction towards your draw on liquidity, right? Because you are pretty much placing your bet that we are going to continue with that same exact volume and flushing to the downside or upside, right? So that is why it is so important to enter off pure displacement and volume. And the biggest things and why these trades lose is when you enter off like weak candles, and a candle that obviously does not invalidate the retrace sequence, right? Because you're looking for something that you can have full conviction and tell someone with a straight face, I am fully expecting price to continue flushing lower, right? So that is the entire kind of model and basis behind why I enter trades, right? So like you guys see here, yeah, we're retracing, but you see this candle here doesn't really invalidate it does not invalidate the retrace. And then boom, like it just passes the eye test, right? Like it should pass the eye test. It should almost jump out of the screen at you saying, oh my gosh, wow, this is obvious. Like it should pop out of the screen and be like, oh my gosh, this is an obvious trade. So let me try to find a few bad examples of something that does not really fit the criteria. I mean, you guys can see it here. It looks very similar too, right? Like this entry right here. Boom, you see this 1, 2, 3, 4, 5, 6, 7, 8 candle retracement gets instantly invalidated by this one displacement candle towards the draw on liquidity. And what does it do? Literally flush right down your draw on liquidity. Beautiful, right? Literally beautiful. So, right, like if you're patient enough to just say, okay, let me sit on my hands until we have a strong draw, and then you actually just wait until boom, it's a confirmed draw. You get the retrace, and then you just catch the invalidated, and then you catch once we invalidate the retracement. Like it's generally as simple as that. But obviously, there's things to look out for when to enter and what to stay out of. So let me pull up some examples of that really quick on something that I do not believe is a good entry. Give me 1 second here. See if I can find one. I'm on the 15 here, so maybe I'll go down to the 5, get some more examples. Well, like pretty much here, I'll just draw it. So right, so like let's say you're drawing liquidities here, and I'll just show a couple examples. So you're drawing liquidities right there, and example 1, boom, we're trending toward that draw liquidity. Everything is going your way. You're like, oh my gosh, confirmed draw. Okay, oh my gosh, I just need my retracement entry. Okay, you get the retracement. Cool. It's a pretty aggressive retrace. But now, what are you waiting for, right? You need this flip out of the retracement to be just as strong, if not stronger, in terms of volume and displacement than the retrace, right? So let's say you have a relatively like aggressive retracement. So what do you need in order to have conviction to continue longing to that high is the flip out of the retrace to be just as strong, or if not stronger than the retrace sequence, right? So let's say you see this, boom, and then you see this, and then you see it takes 5 candles. And then you see it takes 5 candles, right? So what are you saying here? Boom, everything's going your way. Like all the stars are aligning. Draw liquidity, trending price. You get the retracement, and then what do you see? Oh, I apparently see, right? The flip out of the retracement is obviously way weaker than the leg we put into rebalance price, right? So what does this tell you? This tells me, and this should tell you that okay, we are slowing down in volume, and the overall strength in order to go to that draw liquidity higher is no longer here, right? So when catching a continuation, you are looking for overall strength and volume that's going to continue price trading to that draw liquidity. So when you see overall weakness and less strength and volume dying down after we put in the retracement or whatnot, like that should be a telltale sign that okay, we might not deliver, and let me just wait until price blatantly picks up with volume, and let's say boom, we do end up doing it here, then you catch something like that, right? So that is kind of one thing to look for, right? Like the biggest thing is just make sure, like obviously I'll back test like after I just show some examples, but it should literally look like this, right? Boom, trending price action. Let's say we have a bit of a weaker retracement, whatnot. Like the flip out of the retracement should be like boom. It should be 1 or 2 candles, right? It should be strong displacement, clear, right? Because you are pretty much betting, you're placing a bet in the markets that we are not going to resweep the low inside of the retracement leg, right? So boom, you need, in order to take that trade, you need, because right, like when you are entering off weak candles, like so if you're entering off weak candles like this, like if you're entering off this bitch ass candle, do you really have conviction that price is going to flush your draw on liquidity off that? No, you need to wait until you have a strong candle closure in the same direction as your draw, right? So boom, like the biggest thing, displacement, just volume, right? It's not really an ICT based, like inverse for value gap, CISD, yada yada. It is literally just pure discretion in looking at the sequence and saying, okay, I realize that price has slowed down in volume in order to like when we're going to strong liquidity, right? So let me actually try to find some examples here, please, bro. Do we have anything today? Not okay. This is not a great example, but it's not a bad one. So on the 5-minute time frame, you see this, right? You see boom. So what are you saying here, right? So like I don't think we had a strong draw higher, but let's just say boom, we have a strong draw higher here. Cool, cool, cool. What are you looking for? Like, all right, trending price action. Cool, cool, cool. We get this kind of more shallow retracement. I mean, we get this retracement. Cool, cool, cool. It takes 25-minute candles for retrace, and then what do you see? It takes one candle to flip out of the retracement. So that is what gives you conviction. That is what gives you conviction taking these continuation trades. When you truly believe the volume from the flip, I mean, like, sorry, I'm kind of stuffed up. The volume after we've rebalanced price will continue pushing price higher, right? So this is exactly what it looks like. This 5-minute candle fully eats up, fully invalidates this entire retracement leg. That is the biggest thing, right? So I really want to find a bad example for you guys so you can see kind of what to not enter on. But give me 1 second here. No. Come on, give me something, twin. It's kind of hard to find the bad examples because I don't know, like it's because like the good ones always just pop out and it's so much easier. But give me 1 minute here. You can just skip ahead the YouTube video if you want. Here, I'll probably just edit this part. Okay, here we go. Finally found a good example, right? So you see here, right? Let's say your drawn liquidity is lower. Cool, 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 cool. We're in an obviously trading market, bearish, bearish, bearish. You have a strong draw lower, which we did have. So your drawn liquidity is right here, and you want to catch a short lower. Cool, cool, cool. So what makes these entry bad, right? So you see, boom, you are seeing this right here, and you want to catch shorts, right? You might be thinking, oh my gosh, this is a beautiful short. We have kind of invalidated this retracement, right? We gave the retracement, and now we're flipping out of it, right? So what do you see here? It should pop out like the candle you're entering off of should be a literal pass the eye test and be like, oh my gosh, this is a obviously much bigger, clear, and obvious candle that is going to like push price going in that direction, right? So what do you see here? All the candles look the exact same. So if you ever catch yourself trying to enter a trade and all the candles look the exact same, I promise you it's not that good of a trade, right? Because what did I say previously? The flip out of the retracement should be much more stronger and it, like again, just as strong if not stronger than the retracement. See? So you see here, all the candles look literally identical. Wicks and small candles. Not once do you see a big candle that is going to give you conviction to trade lower, right? So let's see when you do. Boom, all these trades get fucking stopped out. And then, I mean, this is a decent example, but like, right, like you see, boom, when price actually clears up and actually gives a few candles the size of that actually are stronger than the retrace sequence, that is when price delivers, right? So that's like your cue, that's like your entry trigger to be able to have conviction shorting lower, right? So like all stars can be aligned. It's not like you're just checking off boxes. It's not a mechanical trading system where you can be like, okay, we got a retrace. I got my drawn liquidity. Now I just need a decent IFVG out of this retracement, and I'm good. No, it does not work like that. You have to literally sit here and judge with your eyes and say, okay, I am very much aware that this candle sequence is not stronger, is not strong as, it's just obviously a weak like a weak flip out of the retrace, right? So it's literally displacement, volume, displacement, volume, displacement, volume, invalidating of the retracement. And what do you see when we kind of get that volume actually started picking up? That is when price delivers, right? So I'm going to try to find one more example here. And then after I find maybe one more example on the charts, I'm just going to get to backtesting so I can show you guys it in live time. Give me something. Give me something. Whatever. All right, I'm going to get to back. All right. Let's get right into it. Shit got me hyped. But let's get right into it. So, gonna be backtesting a few trades for you guys, just showing you guys good examples of displacement, bad examples, and just showing you guys like a trade or two in live real time to see kind of my thought process on and whatnot. So I'm backtesting uh August of this year. So let's get right into it. Is this New York market open? Yes, it is. So let's look at draws and liquidity. Not going to waste your time here. So we do have an untapped 4-hour gap to the upside. Fire, fire, fire. Looks like we do have a 4-hour low that I'm only going to target if we heavily displace towards it, because overall we are reacting off a bullish 4-hour right now. So yeah, pretty much kind of just trading this range going to market open. So what am I going to do? Do exactly what I said. Just wait till we displace towards either or and then look for an entry. Okay. I would take this here, but it literally looks like it's negative RR. This is a very clean flip and whatnot. But a few things why I do not like this trade. One, literally negative RR. I'll never take a trade if it's less than 1-to-1 RR. And then two, you see how we kind of failed to deliver here. This is going to be mainly tomorrow's video going over conditions, right? But you see how we failed to deliver high. We're kind of in this point of rejection, like I said in the first video with liquidity, right? We're in this point of rejection right here. And I'm not going to want to long in a point of rejection because price is just very vulnerable at that point. And that's the reason why I'm not staying. That's the reason why I'm staying out of this trade. Played out. Is there any draws higher though? No, we do have this up here. Maybe we can deliver to it. Let's see. Let's see, yo. We need strong displacement through this hourly. No. Nope. Maybe we go lower? Nah, trading in this range. Yeah, I'll get off and go to the... Oh, wait. No, I'll go to the next day. I'll go to the next day, yo. Alright, what do we got? Strong draw higher. Great. Bullish going into the day. Cool. So I'm going to want to long. Let's see what we get off the good old market open. Do we have anything lower, though? Anything lower? Not really. We do have this untapped hourly gap. Possibly looks like a session low. Possible target lower. But let's just see what we're looking like going into open. Where are we displacing towards? Again, like you guys can make it so simple, just saying, okay, I have two ideas in mind that I want to see price go. Let me just wait till we displace towards either or. Right now we are doing, okay, there we go. But probably not going to get an entry here unless, literally, bro, this is, I mean, yeah, this is a really good entry, but it's literally, one, it's negative RR, and two, entering relatively close to these internal lows, so it'll probably play out, but again, not worth the risk, right? Like I said, literally in the previous clip, if you ever see yourself trying to chase price all the way close to that internal low, it's probably not worth it. It is probably not worth the risk. Yeah, it's going to play out, but like what happens when you literally just, boom, we reject the internal low and instantly stop you out, right? It's never worth it. I mean, in this case scenario, it's probably going to play out, but wow. that that is my point being, right? Never try to chase price. I guarantee if you're trying to, like I know price is going to deliver, but obviously this is not a trade I normally take. I'm kind of just chasing price where literally I'm entering right next to the internal low. I am top blasting, like I said in previous videos. Just stay out of it. It is never worth the risk for this exact reason. Okay, well now you get your real entry, right? This is a perfect example. Perfect example. Obviously, I kind of skipped one candle past, but this is what it looks like, right? Bang. Um, literally, like, bro, this is exactly what it looks like. So let me just place this trade here. Bang. Oops. Wait. What? Bang. Okay, a little bit sketch there, but right. So what are the main takeaways with this? Right, this is a really good example. So first things first, like what did I say? I believe it was in yesterday's retrace video. Why should you never ever chase price, and why you should never enter when we are already kind of taking the internal high or internal low for this exact reason, right? Because boom, you're entering off a premium in that kind of discount. I mean, in that you're entering in a premium in that kind of leg going towards the draw on liquidity, right? So when you're entering on overextended, what are you in jeopardy of getting of happening to you is getting retraced on, right? Like, yes, sometimes it might deliver for you, but more times than not, it's never worth the risk of getting retraced on, and that exact reason, right? So boom, you see you get retraced on here, and then we actually give the retrace to go up to this probably 5-minute gap, probably. Boom, we actually retrace to this 5-minute gap, and then give the delivery lower, right? And you see, and then what do you see here with this candle compared to pretty much this sequence, right? Like, what have I said? The flip you're entering on should be much stronger than the entire retrace sequence. So what do you see here? Boom, chopping, 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 chopping. We actually manipulate up into this 5-minute gap, and then you see boom, pure displacement, pretty much invalidating the entire retracement leg, and you can take this to the downside and place your short. Because why do you have conviction on this trade? Boom, overall confirmed draw on liquidity. We were trending lower on the day. Boom, we retrace into a gap. We rebalance price. We trade into this 5-minute gap, and then you're entering off the candle that invalidates the retrace sequence. And what do you see? And kind of the difference. Boom, it is much more big, clear, obvious, and stronger and more volume than the entire retrace sequence, right? So boom, that is why I took this trade here, and that is a really good example on showing you why you should never extend on overextended price when we are kind of near that internal high, and why it is always worth it just to wait, and then when you get your entry model, boom, you execute and a win. Simple. So let me go like maybe 1 or 2 more days, see if I can get another good example for you guys. Next day. What do we got here? What do we got on the next day? Yo, okay, pretty bearish. Kind of ranging here on higher time frames. Maybe we have like a session high to target or something like that. Looks like we have an hourly low that we're overall trending towards. Okay. Pretty much equal highs as well. So again, like, what do I say, guys? Literally just wait until we displace towards a draw and then scale down for your entry. It's really as simple as that. And just avoid, okay. Do we get an entry? This is literally negative. Okay, I'm not going to take this because still we're kind of in this range here, and it's literally negative RR to the draw. But if the draw was more up here, then I definitely would take it. But again, like, what do you see here? Boom, this candle invalidating the retrace sequence right here. Boom, right there. Literally instantly invalidated by 1, 2 strong displacing candles to the draw on liquidity. But the reason I'm not taking this trade is because of the fact that, 1, we're kind of in this range, which you will learn tomorrow, and then 2, it's negative RR to the draw on liquidity, so I'll never take that. Yeah, maybe we get an entry to this high though. Looks like another strong draw on liquidity up here. Maybe we get an example of kind of what I was showing in the first video with liquidity, multiple draw on liquidity confirmation. You can see why. See, as you see here, we literally, with no hesitation, confirm above this draw. So that kind of gives me a little bit of an idea that we might go to this next draw if we can get an entry. Boom, there we go. There we have it, baby. Okay, so this is an example where we are relatively right, because I just said we were like on last one where we were entering pretty close to that internal high and internal low. But what did I say? Well, like, what did I say in the retrace video, right? When we have a lot of volume towards a strong draw on liquidity and all conditions are in your favor, that is when it gives me a little bit more conviction to take these trades, when it is not a quote-unquote A+ candle closure, right? So ideally, like, if I were to, like, in real markets, I possibly would just take an entry like right here, so I'm not getting filled all the way up here, but obviously I'm backtesting right now. But this is an example, right, when every single condition is in your favor. We are clearly displacing the draw on liquidity. Like, clear as day. Like, we had a day like this literally last Friday, right? It is so obvious where price wants to go. We have a lot of volume. And yes, like, it's not ideal that I'm kind of entering at this internal high here. But when everything is in your favor, strong volume to the draw on liquidity, you can expect price to deliver us higher. So I'm going to take this here, and hopefully my point is proven correct. But let's see here. Okay, right. So again, not ideally. Like, I would definitely have wanted to see price continue with that same exact volume. But again, like, pretty much a few more examples to go over here. Boom, multiple draw on liquidity confirmation. What do you see, right? You see, boom, we take out this first set of highs here. And what am I going to wait for in order to have conviction in targeting the next set of highs? Pretty much a strong candle closure above that level in price that gives me conviction, essentially a breaker structure that's going to give me conviction in taking a trade higher, right? And then what do you see? Boom, we get that candle closure. What do you see? Boom, retracement, not too shallow, not too aggressive to the downside, and then the flip, the retracement, displacement, invalidating the retracement leg you see here. This displacement candle is very much stronger than this entire retrace sequence. So in a sense, that gives me conviction that we are not going to go down and resweep this low that we put into the retrace, and I truly believe that that candle is going to deliver price higher to the draw liquidity. So yeah, I'll just do one more example for you guys, and then I'll call it at that. I don't want to make the video too long, but yeah. So let me do one more day. One more day, yo. One more day, yo. Okay, so boom, very strong 4-hour high, very strong draw to the upside. We do have an untapped 4-hour gap that we can possibly trade to rebalance price before delivering to that 4-hour high. So overall, like, are you guys seeing like a trend? It's literally just we're in a range or something, and I just wait until price displaces to that draw, then I scale down and look for an entry. Simple as that, bruv. Are we gonna go? Are we gonna go? Question mark. Not today. Not today. We aren't. All right. I'm going to the next day. Obviously. Also, another thing, when there are literally no gaps being created, when there are no gaps being created on like the 5-minute or even the 1 minute, barely any gaps and barely any gaps being created, that is a telltale sign to just get off the charts, man. Just get off the charts. It's wow. Okay, that had to have been a news candle, right? Jeez, that had to have been news. Okay, let's see what we got. Possibly we targeted data lows, just heavily rejected that 4-hour high. If this is a data low, okay, it is a data low, so possibly we get a data low entry here. Bang. Let's see if we get it. Oh my gosh, bro. See this is a case scenario where like when in live markets you can catch an entry, right? Because obviously backtesting the 1 minute candle close is right there, but ideally, bro, like in real time you can just kind of gauge it off volume and get an entry right here. This is a beautiful trade, man. Beautiful trade. Again, like what are you guys seeing, right? Trending market, confirmed drawn liquidity, the retracement to rebalance price. Boom, we rebalance this 1 minute gap here. And then what are you entering on? You need something that's going to give you conviction to that we're going to deliver price to that drawn liquidity. And what do you see here, right? Pure volume. Like it is not, it's not IFEG, CISD, like break a structure. It is just gauging price, pure displacement to that draw. So obviously you don't really get an example here just because the 1 minute close right there. But again, right, like we're probably, yeah. I mean, let's see if we can possibly get an entry lower on the day. But that's really it, man. Like you can generally simplify your trading so much just by just set yourself conditions. Okay, I'm not gonna take a trade if we're not trending to a draw. Cool. I'm not gonna take a trade if we don't get a relatively proper retrace and it's not too shallow or it's not too aggressive. Um, that it kind of scares me off too shorting or longing in that direction. So like it's you can make it so simple on yourself. So let's just see. This will be my last day. Give an entry. Give an entry. Give an entry. Nah, damn. See, okay, so this is an example, right? This is an example of an aggressive, perfect, right? I'm getting hella examples here. So this is an example of a aggressive retrace and something that I would not want to short to, right? So you see here, I was overall looking for shorts. I was overall looking for something like this to be able to short, right? But what do you see? You see a very aggressive kind of rebalance in price that you obviously don't want to see, right? Because if we're going to deliver lower, we are not going to aggressively retrace that hard, right? So this is, I don't really think I've shown an example of an aggressive retrace that I don't want to see, and this is a perfect example, right? You see we aggressively retrace, and that just like 100% just strays me away from wanting to short in that direction, because if we were going to get shorts in that direction, we obviously would have held this point in price right here, and we would have continued flushing lower, and it would have looked like this, right? So the second we don't get that and we get that boom, flip off that low, that is the second I do not want to short, and you could have easily gotten caught up trying to short like this or something like that, and then boom, and like instantly stopped out just because of your failure of recognition that we like obviously like we aggressively flipped off that low, and we're probably not gonna continue delivering lower after that, and obviously it doesn't play out, and we continue going higher. So hopefully you guys enjoyed that. I really do feel like I dropped a lot of like education and information there. So let me make the camera bigger here. But hope you guys enjoyed that and are enjoying the series so far. Really just trying to put on everyone on continuation because I truly feel like, especially for prop firm trading, learning continuation, it is so simple, so easy, so high win rate. And if I can put you guys onto this and really just make sure you guys kind of have the basics down and really understand it, that is my goal. So hopefully you guys are really enjoying this series so far. 2 more videos. I guess Thursdays is going to be conditions, because conditions are very important. And then Fridays is going to be how to manage these trades and whatnot. So hopefully you guys are enjoying it. Hopefully you guys can maybe subscribe. And I also post psychology videos, so you can check those out as well. But if you guys want to learn from me one-on-one, I offer mentoring, and I can guide you and help you to help you master this style of trading. That's what I teach. I mentor people, so you can apply to that in the description. And then right now, Alpha Futures is running a 40% off every single account size until the 26th of December. So please take advantage of that. It is the biggest sale of the year, and it also enters you in a chance to win a Cartier watch. So Alpha Futures is the best firm, and code Jack will get you 40% off every single account size. And of course, TikTok, Instagram, and subscribe if you enjoyed these videos. And I'll see you guys in the next one.